We heartily welcome you all to our presentation on fundamental view on pipe sector in general and Welguj in specific. First, let us see why did we prefer to look into pipe sector. As we are all aware of the fact that the resources from which we derive energy are becoming less day by day, and as the world develops more and more going forward, the energy demand is set to rise significantly. That in turn will raise the demand for necessary infrastructure, that is for the transportation of such fuels required to derive energy. And pipes will fall in the category of transportation of fuels, and thus the demand for pipes is expected to be very robust in the coming years. India being the largest manufacturing hub, that is the third best manufacturing hub after Japan and Europe, Indian pipe producers share a major chunk of the pie in the growing pipes market. They can attract a very good business from the international growing pipes market. Now that we have shortlisted on pipe sector, let us see that the factors that have prompted us to pick up Welspun among the whole pipes pack. As we already said, the business for pipes is going to be very robust, and the business for pipes is expected to be $80 billion in the next 4 years worldwide, based on a research report given by Simdex in US. And out of this business, India turns out to be the major manufacturing hubs for pipes. Indian players would address at least 20%, that is, which amounts to $16 billion of that business. And among the Indian players, Jindal and the Welspun are the most important players, even in terms of market capitalization or in terms of capacities. So they would share a major chunk of this business. But as Jindal offers seamless category, means seamless pipes which are being used in the oil and exploration activities. But Welspun has zero exposure to this category. Welspun manufactures only ELSA, HETSA categories and ERW categories which are used only in the transportation of fuels. So this makes Welspun almost insulated to the volatility in oil prices, whereby the oil and exploration activities may come to a halt and it may hurt the demand of a seamless category. So Welspun is almost insulated to it, and so this prompted us to pick up Welspun rather than Jindal. Let us look at the value chain of Welspun in detail. Welspun was majorly into the manufacturing of line pipes, as already said. Now, recently it has also ventured into the manufacturing of steel plates and coils, which are kind of raw material for pipes. Previously it used to import this from abroad, but now that it has started manufacturing of these raw materials, it could improve more on its margins, and also it can remove the risk in project delay, which used to happen previously because of delay in dispatches. Let us see Welspun's credentials in detail. It is the world's largest integrated pipeline company with a capacity of 1.5 million ton per annum. Major of its revenues come from abroad, and 60% of its revenues are derived from US and Canada. It is the largest exporter of line pipe to US, and it EBITDA margins of the best among its Indian peers of around rupees 10,000 per ton. And also its recent plant which has been commissioned, a plate and coil mill plant which has been commissioned, as it comes to full scale production, that would help it improve its operating margins still further. And its highest capex is being planned for Welguj among all the remaining fields in India, increasing its capacity to 2.1 million tons in the next 12 months. If you look at the order book of Welspun, it is around $1.7 billion, which is 1.4 times its FY 2008-9 sales, and this ratio is also the highest among its Indian peers. And this ratio indicates the revenue visibility for this firm in the coming future. Accredited by all the oil and gas majors around the world, now Welspun is eligible to handle almost every oil and exploration pipeline contracts around the world. And a new pipe manufacturing plant in the US increases its proximity still further to these projects. Backward integration by in terms of commissioning, plate and coil mill, as already discussed, would help it improve its margins further. And the most important point in discussing about the demand for pipelines, we have discussed about the replacement market in US. Almost 1 lakh kilometers length of pipelines are due for replacement in US. This is because 70 to 80% of the pipelines US, presently in existing in US, have been established during 1960s and 70s. They have completed their economic lifetime of 30 years, and now all these pipelines are due for replacement. With its new manufacturing plant in US in Arkansas, Wellspun has a tremendous opportunity to address this demand to a major extent. And also its capacity utilization rates are the highest among its Indian peers of about 65%. At the current market price of 275, the stock is trading at a PE multiple of 9.9 times FY 2010-11 EPS and 11.4 times FY 2009-10 EPS. This is at a significant discount to the global peer average of 16 presently. So, looking at the global peer average, taking the nearest global peers PE and also the historical PE averages of Welguj, we have arrived at a specific PE multiple, which would finally lead us to a value of rupees 350 for Welguj in the coming 10 to 12 months. That means, based on the robust fundamentals, we expect Welguj to rise to the level of rupees 350, which means a 30% appreciation in the stock price in a time horizon of 10 to 12 months. This is the financials of Welguj, the forward projected financials. Also, we like to show a glimpse of the international demand which we have spoken about previously. This is it. And finally, we like to thank you, for hiring for this presentation. And we reiterate our rating on Welguj. We are very bullish on Welguj and expect it to, rise to higher levels, more than 30% in next 10 to 12 months. Thank you.